Radio.
Hello, everyone. Welcome to another episode of The Aftershock, where we give you the latest and greatest in all things happening in Web3. We appreciate you joining. If you're over on our podcast, make sure you give us a nice share and leave us a nice review. And if you're over on our YouTube, please give us a like and a subscribe. And if you like what we have to say today, make sure you go and leave us a comment. Now, without further ado, we'll go ahead and jump into this week's Aftershock.
The Aftershock.
So this week, we're getting kicked off with this Web3 lightning round with Chinese city public servants to receive digital yuan salaries starting in May. So personnel in public service and public institutions and state-owned units at all levels in the city will be compensated in the digital yuan. According to a notice issued by financial authorities in the city, civil servants, including public service, public institutions, and state-owned units at all levels will be compensated in the digital yuan. An on-site staff member of a local hospital reportedly confirmed that the workforce will receive payments in digital yuan starting next month. So we've been discussing for a long time the power of CBDCs. This is being seen in China, and it comes a couple months before the U.S. is getting ready to roll out its version of a CBDC. So China's trying to lead the way, and it looks like they will set that, and other countries will have a lot of catching up to do since China is rolling it out on such a huge scale. So interesting to see how this one plays out. Next, we're looking at Russia. It becomes the second largest Bitcoin mining hub after the US. Its lack of clear regulations regarding cryptocurrencies in the US may lead to potential market distribution shift into other countries such as Russia. According to BitRiver, a company that provides co-location services for cryptocurrency mining operations, said that the first quarter of the year, the Russian Federation achieved a new milestone by taking the second position globally in terms of mining power with 1 gigawatt of power involved. As more regulation starts to come in, you're starting to see more and more companies leave the US and more Web3 opportunities leave. Looking at Coinbase potentially leaving the US and setting up elsewhere. But as you look across and look at things like mining, other countries are starting to embrace and allow for these miners to come in and do what they need to set up their business. So I think this is a trend that will continue, and we'll probably see more countries start to pick up their mining capacities. Next, we look at Celsius, as its auction has Gemini and Coinbase as new bidders. So two new consortiums will dispute the assets of bankrupt crypto lender Celsius in an auction scheduled for April 25th in New York. According to reports, court filings, Gemini and Coinbase are among the companies participating in the bids. Documents show that one of the consortium is Fahrenheit, backed by venture capital firm Arrington Capital, which is owned by blockchain investor Michael Arrington. So there's quite a few different companies trying to buy the assets of Celsius. It filed for bankruptcy last year as part of one of the many companies that did not make it during the last bear cycle. And you're seeing these other companies coming in trying to bid so they can get these assets at a discount. So interesting to see which one of these companies will come out on top. Next, we're going to look at SEC as it wins $2.8 million in suit over crypto token price manipulation. So Hydro Technology Corp and its former CEO will pay $2.8 million in fines and remedies for allegedly operating price manipulation scheme. So the New York District Judge ruled against Hydrogen Technology Company and its former CEO, Mike Ross-Kane, in a suit brought by the SEC, ordering them to pay $2.8 million in remedies. The sum comprises approximately $1.5 million in disgorged profits, which refers to gains made from unlawful conduct, as well as a penalty for more than $1 million. So SEC is continuing to go after people, trying to get these fines, trying to get this money, and a lot of companies before they even get to trial are settling because they would rather not have to deal with the SEC in any capacity. So SEC won this one, and I'm sure they will have many more wins coming up this year. As we look at our next article, we are looking into the Swiss banking giant, which invested in Bitcoin and Ethereum, which was SYZ Bank, and partnered with the CMCC Global to launch Syscrest Digital, a crypto fund worth $50 million and registered in the Cayman Islands. The SYZ Bank has been making several crypto-friendly moves, including the launch of Cis Crypto and hiring of Richard Byworth as its managing partner. So you see another crypto fund coming into the mix, and you are seeing Swiss money go into these types of funds to try to get into early stage companies. If there's lessons learned from the last several bull cycles, companies who were able to build during the bearish times and were able to stick around, those are some of your highest multiplied return on investment type of opportunities. And so a lot of these crypto funds emerge to try to invest in these companies before that moment happens. So you're seeing this happen with this particular opportunity. And I think that you will see more of these funds emerging as more and more people have an appetite to diversify into Web3. Next up, we're going to be looking at Zimbabwe as introducing its gold-backed digital currency. The central bank wants people to be able to exchange Zimbabwe's volatility. And the way that they are doing that is by introducing its gold-backed digital currency as legal tender to help stabilize the local currency, the Zim dollar. The tokens will be form of electronic money backed by the country's gold reserves and will be held by the central bank. The RBZ wants people to hold Zim dollars to be able to exchange their money for the gold-backed token to help them hedge against the volatility of the local currency. So currently, $1 US is worth about 150 Zim dollars. And again, you're looking at more and more countries who are going towards digital currency to hedge against inflation, but also to be able to have a monetary system that they can quickly enact and help when necessary and when possible. So I think this is cool. And you're seeing more and more African countries exploring CBDCs as Nigeria launched its e-Naira back in October of 2021. So I believe you're going to see more African countries begin to follow suit. Our final article in this week's Web3 Lightning Round looks at Hong Kong as a court declares crypto to be property in new ruling. In a landmark ruling, Hong Kong's High Court declared crypto as a property and can be held in a trust. It marks the first time such a decision regarding asset class has been made in the city-state. The ruling, which has been handed down in liquidation of a case involving a now defunct crypto exchange Gatecoin, essentially puts crypto on par with other intangible assets such as stocks and bonds. So Hong Kong has laid the groundwork. We'll see if the rest of the world begins to follow. So that's going to wrap up this week's Aftershock Short and Sweet. Get to the point and hope you enjoyed all the content. If there's an article that you really liked, make sure to leave us a comment. Let us know how we can go get some other info that you have learned about so that we can share it with others. And thank you, as always, for coming and joining us over here at Cryptocurrent. So as always, I hope you all stay cryptocurrent.
Thank you for joining us for another episode of Cryptocurrent. Cryptocurrent is a cryptocurrency and blockchain education platform that's bridging the gap between the curious newcomers who are just discovering the space and the thought leaders who are shaping its future. All opinions expressed by Richard Carthon, the Cryptocurrent team, and their guests on this show are exclusively their own opinions. This show and any other Cryptocurrent production is exclusively for informational purposes.